So welcome to this session of the question and answer period with the Pattern Trader. My name is Mark Shawzin, the Pattern Trader. And for some reason, I'm having difficulty engaging this streaming service. So I'm not sure if this is going out. Hey, Neelis, listen, I'm on this live Lula, video room, and I went live a couple of times, and nobody is streaming in here. Are you able to check it?
Give me a second. Are you live right now?
Yeah, but there's no, I've gone live several times, and nobody's streaming in here, and I don't know if it is streaming or not.
Just give me a second. I'm just checking now. Slowly up. It's a lot for it to load. Like this. Okay. Yep, I can see you are live. Doesn't say how long you've been live for. Give me a minute.
Well, I've reloaded this it a couple times.
No, don't do that. Because that means people get kicked out every time, and you start a new stream.
I understand, but there's usually a delay. But
Yeah. Just give me a second. I'm just. Oops.
I understand, but there's no.
Yeah, your stream only started 105 seconds ago, so people would only been notified about it 105 seconds ago.
Yeah, it's a little bit. I don't know. I mean, there is a delay, and I don't know. I don't know if I should be speaking during the period before, but
There's 3 people on here now at the moment, besides me.
I don't see them in the live chat.
Okay, well they've not obviously said anything in the live chat yet, but they are watching the stream.
I see.
On here, and it's not just YouTube either.
Okay. So Ejike says, yeah, it's from my side, a little slow. Yeah, so sorry about this interruption, guys. I'm not sure. Okay, so we've got some people, Isabel. Okay. So welcome to this question and answer period with the Pattern Trader. My name is Mark Shawzin, the Pattern Trader. I'm keeping one eye on the markets right now, so you'll excuse me if I kind of divert my attention. But I'll answer any questions you guys have. The markets are kind of all over the place right now. Usually I like to hone in on 1 or 2 setups, be very confident about what I'm looking at. But I think, we've had huge volatility in the markets, FX, gold, stocks. And, I can well imagine that, we're going to have a bit of a diffusion of that volatility, which means things will, go sideways, become a little bit more unpredictable. Hate these kind of markets where, one day's, the opposite of the next day. I'm always really looking for moves that are going to translate from one level to the other. And we've just had huge whipsaw price action in pound New Zealand, in the yen pairs, in certain stocks. I've been trading Zoom, ticker symbol ZM, very actively. Every time it gets to $330, I short it. I shorted it on the close yesterday, 329. I got out of my shorts at 321. And then I shorted it again when it went back up there. And now I'm actually taking a nibble on the long side. It's just, I think you're just having these banging markets, and, this isn't great trading. Usually I like to trade based on definitive signals. And so I just put a buy in there in Zoom just because I'm just going to play the volatility right now and try and steal a couple of bucks, but just because I'm bored. It's, very, very difficult in there right now. So these are periods that, are difficult for everybody. But this is why, I kind of, caution people that trading is a process, that, I look for setups that translate to big moves. And even if I get just 1 or 2 of those a year, usually obviously there's many a year, but I'm looking for 2 massive, winners a year to really put me in, the plus column. And, I had one, a month ago where I bought a whole bunch of puts on the NASDAQ right as the NASDAQ peaked at 334 in the QQQs. Then it dumped all the way to 300. And I made a massive amount of money on that move. So, right now I'm just bored. I'm playing around. That's just the way it goes. That's why I kind of like talking to you guys. People say, well, if you're making so much money, then, why are you doing this? And it's because, watching the screen, I've been doing this for more decades than I'd like to, acknowledge here. And so, to me, it just gives me a lot of, gratitude to give back, share some of the knowledge, what I'm looking at, from what I'm looking at. So GK says, I agree, very unstable times. GK says, what do you think of XAU still going short? So I wouldn't short it here. Gold has been in this, it actually looks like a very profound double bottom. This is, objectively, if I could trust my lying eyes, I was looking at gold trading in this ascending, broadening price pattern. And when it hit $2,100, I said it's going to come to the bottom end of this ascending, broadening. I don't know which way to show this that it looks right. And I was, projecting that gold would come between 1650 and 1700. And it hit 1671 or somewhere in there. And now we've got this massive double bottom on the weekly, the daily. And now the question is that, and it's right at the lower support level of this, ascending, broadening price pattern. So it makes sense. This is where it was going to grab a foothold. And so the question is it, now putting in a bottom that's going to lead to a sustainable move higher? And it could. It's just that we've had such profound history going lower. It's kind of like the pound New Zealand. We had such a profound downtrend, and even though I saw that the pound New Zealand was going to turn higher, that it takes time. Whenever your markets come down a long way, so gold has dropped from 2,100 all the way to 1,650. So now it's not going to just turn around and go back on a dime. It's just going to create some time and distance. So we'll have to see if this is really a great bottom or just a fake out. So gold kind of needs to get above 1750. We're not too far away from there to kind of break this double bottom, kind of confirm that we put in a bottom. So I'm kind of watching it, right now. Dan says, has crypto topped out? That's obviously, crypto is, it's a market unto itself. And, typically, I evaluate markets with, history. And this has got more and more history now, but the history is so what I call parabolic, where it just goes from 4,000 to 57,000. So actually, we're consolidating at this top end, and it looks like kind of a healthy consolidation. It doesn't look like a sharp, jagged whipsaw kind of thing. And frankly, this thing has gone up so high that I think that, a consolidation between 50 and 60, frankly, if it spent a couple of months doing that, I think that would be, inherently much more stabilizing than just this, straight up moves. Nothing can sustain that. And I just worry that, you've been in this parabolic move from, 4,000 or 10,000 to 60,000, it's straight up. So I always kind of worry about markets that look what I call parabolic. They go up very, very, very quickly. So frankly, the more that this just hangs around now and does nothing and loses some of the volatility, I think that's healthier. I think that would create a base for the next move from 60 to 100,000 if it were going to do that. But, we're clearly at this area where there is some resistance. So when there's resistance, the question is, does it roll over? Or does it just, stay in this thing and then create a base to launch for the next move higher? So I think, frankly, the more it hangs out here, the healthier it is. Eric says, what do you think about UWMC? So I love it when you guys bring me different ticker symbols. There's a universe of 30,000 stocks out there. and can't find them all. So I always like when, let me just get my chart set up here. What is this? I mean, what is this stock? It's crawling along a bottom at $7-8. Yeah, I wouldn't think that this is going to go anywhere. Do I think Australian versus US is going to go lower? Australia, all the dollar pairs are really locked. They're landlocked in this range bound. So I think the dollar is going to come down long term, but we hit this major support area. And the thing about dollar trading, if you guys have been trading for any, is that the dollar, it can get landlocked in a trading range for weeks, months, and several months. So I just think we're locked, 75 on the downside in Aussie and probably, 78 on the upside. And, it looks like a double top. It looks like a head and shoulders. So it looks like a bear pattern. But I think the long-term trend is higher. So I think it just stabilizes in here. It looks pretty ugly. And so these are the markets I try and avoid. When something's just kind of just stopped and it's just doing this, I'm not going to spend all my day trying to pick the next 20 pip move out of a 50 pip range. That's just not a good use of your time or energy. So I just move on when I don't see things that are, going to go from one level to the other. And that's what patience and discipline's all about. Sometimes you just have to close down the computer and, wait for the market to sort itself out. So the dollar, I think, is in this huge, consolidation zone and, unlikely to kind of do anything right now. But, long term, I think the dollar is going to go lower. Sorry, I kind of got this position in Zoom. I'm kind of keeping one eye on it here. So Complete Wealth wants to know about the Dow Jones. So the Dow Jones is, at the upper end of this ascending, broadening price pattern. And in the last couple days, you'll notice that the range, itty bitty tiny ranges, 100 points in the Dow. That's, the Dow's whatever, trading at 334,000. So 100-point range. And you can see. And so what that says to me is that this market is stalled out, that this uptrend has been going. And then for the last 3 days, you kind of went to a high and now you've just been stalling out up there. Now, the question is, like Bitcoin, is this just like consolidation for the next move higher? Or is this representing a stall and the market is, apt to, go lower out of there? So we're at the top end of this ascending, broadening price pattern. Like the S&Ps are trading at, 4,000. I thought maybe 4,200, 4,400 is going to represent, a major high there. So I think we're not too far away from some major, levels in these indexes. So it does feel like we're stalling out on this Dow Jones, but whether it goes up or down, I think we could just be now getting, into this thing where we're really just going to tread water. We've had, a year of just full on, this rocket ship, and, nothing like that is sustainable or healthy. A healthy market doesn't just go straight up. You want to see some kind of, basing and consolidation. And I suspect we're going to, get that in the stock market not too soon. It says, Pound New Zealand, have you checked out that pair? Yeah, I'm always checking that pair. To me, it's, a hugely volatile pair, but I think that this thing's going to go up much higher over the long run. So yeah, it hit this resistance at 198, consistent where it hit last November. And then we've just been like whipping. And again, this is, where most traders just get, taken out, where they just, can't, 3-4 days of this volatility. They try and buy it, sell it, whatever, bang both ways, blow out your account. I'm long. During this whole down move, I didn't get out. I actually bought some more. Tell you the truth, because I think the long term trends, point higher. So yeah, you've got this huge 400 pip bouncing area. It looks wild, looks scary, but that's why I look at what I call governing price patterns. So I think there's a series of daily and weekly price patterns in pound New Zealand, what I call the governing price patterns that point to this thing going higher. So I'm staying the course for now, and I think that's the difference, between understanding the cards you're holding at and trading off a 15-minute chart. Because if you're trading the pound New Zealand on a 15-minute chart, it looks like a carnival ride, right? It's like down here, back up there. You're trying to grab 50 pips. You're trying to play with a 30 pip stop loss, or 50 pip, or even a 75 pip. How can you have a 75 pip stop loss in a market that's moving 400 pips? So what I do is I try and look at the forest from the trees, right? So right now you're in the weeds, you're in the trees, you're seeing this huge whippy thing. I try and back up and look at what the big picture is. And to me, the big picture, you have a double bottom on the daily at 185, you have a double bottom on the weekly at 185, and I think we're going to go higher. So I actually use these monster, dips as an opportunity just to buy more. Mo says, what is your opinion about Euro Australian? Yeah, it looks like we're kind of grabbing a bottom down here on the daily and the weekly. Yeah, I think that this thing is put in a major bottom around this 150 area here, this 152 area. So I think the next move is likely higher in Euro Australian. Complete says, what about New Zealand yen? A little bit more ambiguous. Looks like there's a lot of resistance right here in New Zealand dollar, Japanese yen. But it looks like we're just going to be in no man's land for a while in that pair. Eric wants to look at F. Is F fiver? FBRR. Is that fiver? Yeah. Well, I don't know, man. This looks like a double top head and shoulders right here. But here's the thing. When something looks like something, then it needs to go in that level. So to my mind, we shouldn't, we've reached this resistance level 232. If we go higher, that's going to start busting the whole look of this double top head and shoulders. And so we're really at an inflection point. If we roll here, and certainly if we take out 180, that's the neckline of this whole pattern, and would, portend that this thing goes lower. Yeah, I think there's still some support here. I'm looking at these weeklies. Yeah, sometimes it's not that clear. So sometimes what I do is I draw a structure around what I'm looking at. So right now, just looking at this thing on the daily, it has like this double top, 336. It kind of, had a top, went all the way down to whatever it was, 230, bounced back up to 297, and then dropped. So it's created this double top and then head and shoulders on each side. So that's what it looks like. And so if I'm looking at a chart that looks like something, then you should see the market action correspond to that. You should start seeing this thing go lower. If it, on the other hand, starts going higher, then it starts busting the implications of that pattern. And sometimes I'll just do the opposite because, it's like a case of what should go down. If it doesn't go down, it's going to go up. So what doesn't go down is going to go up. I know it doesn't sound like a very brilliant statement, but I think I would watch it in this zone. How it kind of comes out of here. If it breaks higher above 232, I'd be inclined to buy it. On the other hand, if it breaks lower under the recent lows, it could post back to this 180 area. So Eric, you're welcome. Completely says the yen pairs. So the yen pairs are really at an interesting inflection point historically. So the yen pairs have been in a primary secular downtrend. The yen has been strengthening for decades. And now it's an open question whether we're changing that paradigm. So dollar yen is trading at this area. There's a long-term descending triangle that's been here for about 5 years. And typically every time we hit the upper side of that descending triangle, I've been shorting it. And now we're back at the upper end of it. And now it's a debate whether, that's a short up here and we roll back down in the, direction of the major trend, or we start breaking this paradigm. It's an open question. I mean, euro yen is acting pretty well in this, in this area. And so, sorry, I think I just want to get out of this position here real quick. So the yen pairs are really, at an inflection point, which means that they could go either way. In my mind, I still think they're going to go lower. Let me just. I just want to get out of this position here. I've been kind of day trading Zoom, and doing pretty well. See, I just got out. Eric, you're always welcome. So, Zoom is a stock that, long term, it just looks to me like there's nowhere for this thing to go but lower. So, every time I get a bounce in Zoom, every time it goes to 330, I just like smack it, and go short. And, I went short last night at 329. It opened around 327, went down to 321 really quickly. I took $9, went back to 330. I shorted again. I took like $5 out of it, and I'm just kind of weighing whether I want to get back in here and reshort it. I probably will, but it looks like there's obviously a lot of support right here at 3. It made an 8-month low last week and went to about 302. It dropped under 308, and then kind of bounced back in the range, pushed back to 330. So you're kind of getting this zagged kind of trading thing. And I just think that this thing is just hanging on a ledge. This ledge between 305 and 310. There's been some support there. We could continue banging off that thing, but eventually I think we're going to go through that. And I think Zoom will be $100 lower than where we are. Kirby wants to look at MIDD. Yeah, I mean, this has, been in a, this thing just goes sideways. So these are kind of markets where I just stay out of it. Because, I mean, there was a whole period from November 2020 to February 2021, so 6 months, where it just went sideways from 100, and then it had, one burst up. So if you weren't there for that burst, this thing just goes sideways. So, look, if you're a real ultra long-term investor and this has got a dividend, then, maybe this is for you. I like to find things that move. So I really don't know what this thing is. If you're a Warren Buffett type investor, this could be great for you. Dan says, how much leverage do you use? It depends. It depends how excited I am about a trade. So if I'm just trading in and out, like looking for trades now where, I'm getting the euro pound and I'm looking for 100 pips here, or I'm just knocking around, then I try not to take too much risk. I'm just, 0.5%, 1% of your equity. So that means, if you've got a $10,000 account, 1% is $100. 0.5% is $50. So that means if you try 10 trades for $50 and you lose all 10, you've lost $250 of your $10,000. And so you're not going to get hurt. So, that's really the way to trade responsibly over the long term. But, if I see a setup that I really like where I kind of feel like the risk is like today, if I buy pound New Zealand dollar, today's like kind of the low. The low of today is, I bought some today and, made up my mind that, if it made a new low again, I would just get out of that thing. And to me, it's like such a low risk and it's so close to where I got in that, I can scale up and make a bigger trade. So it really depends where you're getting in a trade, how much you like that trade, what your vision is for that trade. Sometimes I'm not shy, when things really line up, when all things are kind of, so to me, Zoom, I want to see how we close today. So if we close closer to the low than the high, then this is kind of, you can see we've got this cadence of lower lows right at the bottom. So you can see, we keep bouncing off this 302, 305 area to, 340, 330, 325, 318, and you can see each bounce is lower. So I think we're just staggering lower. And so, for instance, Zoom, if it closes on the low of the day today, then I would just use today's high as my risk and then just load up the boat, and take a short position. I don't do options in Zoom. They're just too expensive. I don't feel like I get sufficient leverage for the risk. So, Ajika says, I'm thinking of putting a sell stop on gold at 1720. I kind of would leave gold alone for a while. It feels like it's put in a bottom. It could have put in the top. I mean, if you want to sell it, you should sell it. You should sell it at, into strength, not into weakness, because I think it's just going to bounce. So if you want to have a go at it here, with a 1750, 55 stop loss, then that's probably the way to go. So Complete Well says, I only know Forex. So to me, I trade every instrument the same. If you showed me a chart of the euro yen, or you showed me a chart of pork bellies, or you showed me a gold chart, I would just look at that based on a visual representation. The first thing when I open up a chart, the first thing I want to say to myself or identify, so you open up your charts, pork bellies, gold, Forex, euro yen, and you say to yourself, what is this market doing? Is this market going up or is this market going down? So if it's in a trend, you just want to figure ways to get in, the direction of the trend. Now, trends do end. And when they end, they put on a chart pattern. So markets just don't go here and then there. Sometimes you get this V bottom, very rarely. So before it turns, it always puts some kind of chart pattern. A double bottom, an inverted head and shoulders, a descending wedge, an inverted, a million different patterns. And then once I feel like I know the trend, the pattern, then I wait for a particular setup where I can get in, where I can understand where to leg in the trend or, the turn, where the momentum is, sorry about that, is in my favor. So like today, I'm looking at Zoom. Zoom is in a downtrend, right? It topped out at $588. It's trading at $320. So it's definitely been coming down over the last 6-8 months. It's down 40% from its highs in the last 8 months. So it's in a downtrend. And then it has a million bearish price patterns that tell me that the next direction is lower also. So now once I feel like I can understand trend direction, then I figure out, okay, this is where I should be faced. And then I look for a given set of bars, daily bars or weekly bars or whatever you're looking at, where I can understand where to get in and what my risk is. So for instance, today, we have a high and low. The high is like 333, the low is like 321. Let's say it closes closer to the low than the high. Let's say it closes around 323. Then to me, I call that a key reversal, where during the day it made a new high, but then it closed on the low. So now I understand my risk is around 333. So if I can say, okay, my risk is $9, and I think that I've got a $50 or $100 upside on this thing, literally, I think you could have a 5 to 10 to 1 risk reward on this thing. And so I'll know where to leg in. So let's say today's low was 321. So tomorrow I'll just put a sell stop at 320 and let the market put me in. If the market keeps going up, then my order's not triggered. And, that's a beautiful thing when you're not put into the wrong trade. But if the market executes me, now I got my stop loss around 333. And now I'm in this trade that's just, consistent with the direction of what I'm looking at. So I don't care if you're looking at Zoom or the euro yen or gold or pork bellies. I would set up the same analysis the same way. What's this thing doing? Is it in an uptrend, a downtrend? Is there a pattern that indicates it's turning? So the first thing you need to understand, which way do I need to be faced? And not for the next 15 minutes. So if your thing is, hey, look, man, I'm just going to pull up for 3 hours, open up a 15-minute chart, see where these magic indicators intersect, the Bollinger Bands with the moving average, with the MACD and all of this stuff, then that's your strategy. Then you're looking for a move in the next 3 hours. And that's not my thing. What I'm trying to do is take a piece of the middle out of just huge moves. So, when Zoom moved from 347 to 302, I took out like $35 of that move. That's what I'm looking for. I'm not kind of just, trading in and out for, nickels and cents. I'm trying to take a piece of the middle out of big moves. So when I saw gold in this ascending broadening price pattern and around $1,900, I told my members, I've got it in every one of my emails going back to early January. So I'm on record. I've sent it out to tens of thousands of people around the world. So it's not like I'm kind of saying, I saw what happened and I'm telling you guys that now. When gold was at $1,900, I said we're going to the lower end of this ascending broadening price pattern between $1,650 and $1,700. I was very specific. And so for 2 months, I've just been short gold. I've just been holding my thing. And so I took from 1840, I got in at 1841 on one trade and got out at 1687. And added to my position, I got in at 1797 and got out at 1687 on 2 trades. And I made 600 grand on those 2 trades, holding them for 2 months. So that's what I'm talking about, taking a piece out of the middle of big moves. Now, those moves don't happen every day, every week, but look, I've taken a piece out of, chunks out of huge moves now. And if I don't take another piece out for the rest of the year, I'm good. And it's a very different orientation to trading, right? Because, we all like trading in and out. We like the game and, we like the rush and the action. But that's really counter to being a consistent, profitable, making big money in the markets. So, for me, I just, when I see a move, in gold, it goes from 2,100 to 1,700. To me, it's insane that people would try and pull up a chair and try and take, 30 pips here and 50 pips there and whatever. My mentality is when I see a move like pound New Zealand, I think it's going to go up 1,000 pips. I do. I'll say it every day. And so That's what I'm looking for. I want to, take 500, 600 pips out of 1,000 pip move. So it's a whole different orientation. Richard says, what about euro yen? So that is a very interesting, I think euro yen to me is kind of a proxy for these yen pairs. It's at this monster resistance level. So I've been doing these weekly webinar series, and yesterday I kind of put up the euro yen and showed this monthly downtrend for the last 12 years that intersects exactly where we are right now on the monthly. So we're at a huge inflection point. How we behave right here is really going to dictate the next major move. So do we stall here at the 131, 132? And that would signify, a move lower. Or do we just keep consolidating here, like Bitcoin, just hanging in, holding around this area? Then that would, give us another. So I just think that we're in an area now where we're likely to pause. There's huge resistance in here. And so the question is, does it just pause here and just hang out? Or do we start seeing, huge moves where we test 132 and then, close lower? So I'm on the fence right now. The long-term trend is lower, but there could be a paradigm shift underway in the yen. And so it's an open question to me. So Amar says, what do you do when you're not trading to keep your composure or distress? Well, by definition, if you're not trading, you shouldn't. But then go and take a walk, get on your bike, go and smell the air, meditate, get away from the markets. So the market shouldn't be this all-consuming thing, and that is the problem. When you pull up your chair for a 3-hour period of time, and you stare at the screen and try and make the thing move, until your eyes bleed, you're waiting for this magic crossover. To me, trading should be effortless. The market should just put you in, and then it just, if you're right about what, so like for Zoom, if I look at the high and low today and we close on the low, tonight I'll either sell on the low, or tomorrow I'll just put a sell stop underneath, today's low, and let the market put me in. If the market goes higher, then I'm not triggered. And if the market puts me in, I've got my stop loss behind it. And that's all it should be. And now, you could sit back and, watch Zoom go, Zoom from 320 to, 280. And then 250 and then 200. And I do think we'll be $100 lower from here at some point. So, you can remember this conversation and say, well, why didn't I get in that $100 move? Because you were trying to do something every 15 minutes to try and take out $1 here and $1 there. And so it's, it's just a different mindset. And for me, it's not a question even about greedy. I just visually, when I see something, it makes no sense to try and just bang it out, with your broker every couple of hours, trying to take a few dollars and cents here, nickels and dimes, when I'm looking for, the next $40, $50 in Zoom. So what is Zoom doing, by the way? Probably need to be getting short again. So it's just hanging down at these lows. So the low today was 321. Just put, your sell stop underneath there. Although, intraday trading is, very tricky. Markets can go, and that's exactly what happened today. Zoom, I shorted it yesterday around 329, high 329 area. Opened at 327 and went to 321. And instinctively, I said, look, in the first 10 minutes, if I've got $9, on 3,000 shares, I made like 27 grand in 10 minutes. I just got out. There was no rhyme or reason to get out other than I made $9 in 10 minutes. And then all of a sudden, it just bottomed and made a new high. It went from 321 all the way to 333. And I just sold it. I just sold into that again and made another like $5. And now it's just kind of messing around between 321 and whatever. And I'll probably bang it again. I'll just keep, this thing has got nowhere to go but lower. So every time it rallies, I'm just going to sell into it. But, on the other hand, it's called a set and forget strategy, right? So you look at the high and low. If today we've got a key reversal bar where you made a new high and you close on the low, just put your stop under today's low. Put a, sell stop underneath there and let the market do all the work. Tomorrow it opens $5 higher, and for the next 3 hours it goes. You're not watching it. You're out on your bike somewhere, right? And then, by the end of the day, all of a sudden it comes down, hits your stop, and now you're $4 into profit. And then the next day it opens $10 lower. And it's effortless. All you did was put in one sell stop and then went on your bike. So when I get off with you, I don't watch the markets till 4 o'clock again. There's not a whole lot, going on right now. I'm looking at a couple of stocks. I'm looking at this one stock, WRK. It's actually coming off today. So all of my stocks, like Lyft and all of my stocks, are coming off. So I actually started buying some puts today on the QQQs. I bought some puts yesterday, the 329s, and then I started adding to my trades because I feel the way these indexes look now, they feel like they've stalled out, where they've got these very narrow range bars right at the top. And I said this yesterday, even before my webinar, on the webinar yesterday, I said these small, bars, they look benign, they look, innocent, but sometimes you can get huge reversals, because what it represents to me is that the market went and made a new high. And then all of a sudden you've got these little bars right stacked at the top. And all that tells me is that this market stalled. It just, it's been trying to go higher. And then it's like, kind of like, that thing where you push, 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 and then you can't get through. Bang, it just goes the other way really quickly and creates this vacuum. So I'm actually long these, QQQ puts, which is a bet on the downside in the NASDAQ. And my options expire in 2 days. So I need to move really quickly. So maybe you guys can make that happen for me. Charles, I don't really recommend brokers. I don't know where in the world you are. There's got to be plenty of brokers out there. Interactive Brokers is an international broker that, you can trade any instrument under the sun. So to me, Gama asked about GameStop. To me, stocks like this, it's not a question of if, but when this thing goes back to $30. It doesn't make sense. How can a stock go from $3 to $500? Unless they invented, there's nothing on this world that makes sense. And then after it went to $500, it went back to $40, and then it went back to $400. So I don't care if company changes its business plan. Once it gets into crypto, it announces a new strategy. There's nothing on this green planet that justifies a move from, $9 to $500 in a month. This is just financial machinations, and this thing's already, looking to roll again. And you know what? I'm probably going to buy some puts on this thing. The problem with buying puts is that you got to be right now. And this has lasted a lot longer than I thought it would. But this can't last. I'm long some puts on AMC. Trading under $10 now. I think AMC is going to go to $1, and we're trading at 10. So I think you got a 90% return in AMC. That company is broke. It shouldn't be trading here. But it's just the market can stay irrational a lot longer than you can stay solvent. So I look at these companies and they make no sense, but somehow the investment bankers and people just are able to prop it up. These Wall Street bettors, they don't know what they're doing. They're going to get their hat handed to them. So I'd be short GameStop. In fact, I'm going to short GameStop. I'm going to buy some puts. I'm going to check out what they look like. All right, guys, I think I'm going to leave you there. I've got a 2-hour webinar tonight. You should check it out. Just send, I don't know what the link is, but if you want to attend the webinar, just send an information request to support@thepatternttrader.com. I'm doing a 2-hour live webinar tonight at 4 p.m. And so it's very difficult in these kind of conversations because, I like to share what I'm thinking on a price chart so you can make sense of it. So that's what I do on these webinars. And if you want to check it out, just send a message and ask them for the link. It's a free webinar. All that it's going to cost you is your time. All right, guys, have a great day, and I'll